you can really dramatically increase your returns. And once the real estate investing community gets their head around this, they generally try to get as much money through this as they can to maximize their long-term returns.
Next up is Tom Laune. He's the creator of the Bulletproof Wealth Strategy. He specializes in helping investors become their own banker, teaching them to grow their wealth and avoid lost opportunities using specially designed life insurance. Tom Laune, thank you and welcome to Real Estate Hacking Live.
Thank you, guys. I really appreciate it. I'm glad to be here. So how are things going today?
It's going well. I love that background, and it definitely fits your brand well. That Sherman tank looks pretty cool.
Yeah. I've come up with a new thing where I've tried to use an analogy where every part of my strategy relates to a different part of a tank, and I call it Tanknology 101. So it's kind of fun. It really
There you go. Well, so yeah, you definitely have unique perspective, being working very closely with the real estate investors and showing them how to make really, really nice returns using very unique strategies that I see the strategy that I see other people comment on it, like TikTok, for instance. And then I'll just go straight to the chat because the chat's all like, you can't do that. There's no way. That's not legal, blah, blah. But I was like, actually it is. It's just called this. Most people don't know about it. Can you share a little bit about what this strategy is and how folks are using it to beat inflation?
Absolutely. So listen, I work with almost exclusively real estate investors, and they're a unique group of people because they generally want to control their money, right? If you're not involved in real estate, generally what's happening is that you're wanting somebody else to manage all of your money for you. And if you're involved in real estate, you're generally wanting to be a part of something that you're doing your own due diligence on and research on. So the big thing that I do is provide a place for money to sit while you're waiting on a deal to come along that is not just sitting there losing money to inflation. So the place that it is inside of a specially designed life insurance policy, and it is growing every year and compounding due to the fact that it's getting a dividend. And it's a great place for real estate investors specifically to leave money on the sideline waiting for that next great opportunity that they have versus a traditional bank. Does that make sense?
Yeah, no, it definitely does. When it comes to being, so you heard the last guest, he was talking about cash is king. On the other side of the coin, there's inflation just, eroding cash too. So you definitely want it available for good opportunities, but you want to retain the buying power. So, you show investors how to essentially have your cake and eat it too, right?
Yes. So the underlying principle that I'm teaching, it's not complicated, but the best way to describe it is interest rate arbitrage. That's what I'm really teaching people. So what you're doing is you're basically creating an asset that you can collateralize and utilize that with a lower interest rate than you're putting in your investment. So if you were, for example, paying 5% to a place for the use of capital, and you were earning 10%, your rate of return just went to 100% when you look at the numbers on how it works. Whereas if you just took your own capital that was sitting in a bank account and invested it into a deal, let's say $100,000 in, then you earned a 10% return. That is the maximum amount you would get, is the 10%. But if you have your place growing and compounding over here, and you're just paying a small percentage to use it and earning a larger percentage, then you can really dramatically increase your returns. And once the real estate investing community gets their head around this, they generally try to get as much money through this as they can to maximize their long-term returns.
Yeah. What do you call that strategy again?
So it's interest rate arbitrage, right? We're arbitraging interest rates. Just, this is what banks do exactly to make their money. So banks do not sit there and make money by paying a piddly little amount of interest when you deposit money. So if you deposited $100,000 with a bank and they paid you 0.25% interest, right? That is a terrible return. And banks don't make money by paying you 0.25% interest. They make money when somebody takes a loan from them and they're earning a higher return than they're paying you in interest. And they're just making the spread. They're arbitraging that money. So
yeah. And they're also using fractional lending to I guess 10x that. But yeah, they
are doing that, Chris. But that's a whole nother conversation that most people like their head starts to blow off.
But yeah, they're paying you the 0.25% while they can go out and earn 4%, 3% on a car loan, or 6, 7, 8% on real estate or business loans, and a whole host of other types of loans. Okay.
So if they were paying 0.25% to you and charging 5.25%. I talk to people all the time and they say, oh yeah, the bank must be making 5% rate of return. No, that's not it. They're on $100,000, 0.25% to you is $250, and they're bringing in $5,250. Does that make sense, Chris? And that's without fractional reserve lending. That's a 2,000% rate of return the bank is actually getting. So this is the principle I teach people every day, is you've got to position your capital to where you can have liquidity or access to that capital when you need it, but you're not just letting it languish in a traditional bank account.
Yeah, I have a feeling you'll have some people reaching out to you about this. So essentially it's a way that you can be your own bank and fund your own deals, and you can set it up in a way where you can do that almost in perpetuity, where you're constantly compounding return as opposed to setting it in stone because you paid cash.
Totally. That's exactly it. I mean, one thing I was wanting to do on the show today is I was wanting to just define the difference between assets and liabilities. The way that I look at it is an asset is something that brings you money, and a liability is something that takes money away from you.
Yep.
And you just got to be careful to be investing in assets, right? And not in liabilities. That's one of the things that I think is a trap people get into, is they do all of this fancy tax maneuvering, right, to try to pay lower taxes, but they end up just buying liabilities. You know what I'm saying? It's not good.
So in the last couple minutes, what types of investments are you seeing most of the clients that you're working with? How are they using this in their real estate?
Okay, so I'm seeing a lot of private lending. That is a really good use for this. So you can basically, this is what I have done.
That's how I like. I've got a friend. So I know he does that with private lending and private equity placements.
Yes, it's amazing for that. I'm also seeing a lot of people who have a temporary need for capital, who do flipping and wholesaling. It works amazingly well for them, because let's just say that you borrowed $75,000 to purchase a house that was distressed, right? Now you're not using your own money to buy that house. You're using the insurance company's money in this case, and then you're able to fix it up, sell it at a much higher ARV after repair value, and then you're making the spread, and your cost of capital was almost nothing. So I'm working with a lot of people who do flipping. I'm working with a lot of people who do private lending. And then I even have clients doing syndications and buy and holds and, self-storage, mobile home park investing, just really all asset classes in the real estate world. I have clients doing that.
Love it. Love it. Well, it was a pleasure having you on, and it's been a while since we've been able to hang out.
It's been way too long. It's been way too long.
We'll make it happen again soon. So thank you very much.
All right, thank you, Chris. I'll talk to you soon.
Talk to you soon.